Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 30th COT report in 2014. As usual, we're going to start off with the changes in commercials positions, so here we go. The Japanese yen is on top of our list with a 22% change in commercials positions. You can see the change over here, and roughly the same change sizes in large speculators and small speculators. You can see the change itself being a bullish signal. And if you look at the chart, you can see some examples how effective the COT change signals were in the Japanese yen in the past. Let's open a 5-year chart and see how extreme the Japanese yen is currently. Let's not forget we had this pretty significant bullish extreme a couple of months ago. We've moved away from these levels, but as you can see, price is still higher than that bottom. So I would say the extreme, this bullish extreme, is still in place at the moment. Moving on to the Swiss franc, we've got a 15% change signal over there in commercials, 16 in large speculators. You can see the changes over here. Again, bullish signal similar to the Japanese yen. Opening a 5-year chart, let's have a look at the extreme. You can see that we are getting closer and closer to a significant bullish extreme. The last one was back here in mid-2013. You can see it was a very successful signal. The previous one was also a very useful signal for anybody who was watching this COT report back then. We're not at those levels yet, so there's still roughly 20,000 contracts positioned to move in case of commercials, and I would say large speculators also to really reach those extreme bullish levels. But it can happen, of course, in a few weeks' time. So keep your eyes on the Swiss franc. The Chicago wheat is our next market. We have an all-time extreme, actually, in large speculators. Of course, we're talking about large changes now. We've got a 12% change in commercials positions, but of course, this all-time signal is always pretty visible for our eyes. Anyhow, the change signal is bullish, as you can see. It's larger than average, but you can see some greater changes in the past. Analyzing these changes right now on this 5-year chart, it's difficult to tell how effective these signals were in the past. I wouldn't say they were that effective, actually, just by looking at some of these examples. If you look at these larger bullish change signals, were not so effective back over here. So but anyhow, it is a bullish COT signal that we can consider acting on. But let's open this 5-year chart and really see this all-time extreme that we have in large speculators, and of course close to all-time extreme level in commercials position. So it is a bullish extreme signal. If you look at this 5-year chart, you can see how well these extremes were capable of ending declines, or of course the extreme signal is also extreme signal in the opposite direction as well. Of course, we're talking about bullish extreme signal right now. One warning though, you can see that these extremes can be present in the market for quite some time, actually, almost a year if you look at this period back in 2012. So bear in mind, you may catch the bottom by one of these signals, but you may need to wait a couple of months before price really starts reacting to the signal. Moving on to large speculators COT Extreme. Well, we've just talked about the wheat, so let's move on to Russell 2000, where we have this 162 report extreme in large speculators. You may see on the chart that it is a significant extreme, and it's a bullish one, of course. We are expecting, by looking at the chart, that prices may end this little decline and continue the rally. Of course, we need to see the correlation with the other indexes as well before taking a trade in Russell. So it's a pretty significant warning I want you guys to have. But anyhow, it is a bullish extreme. There's no question to that. Possibly affecting prices in the near term. Moving on to the euro, where we have a all-time extreme in small speculators. So we have a 100 report extreme in large speculators, 101 report extreme in commercials positions, but an all-time extreme in small speculators. If you look at the chart, you can see that the last time we had such an extreme was back here in 2012, and it was actually a pretty significant bullish extreme. That was a bit early if you look at the chart, so we had even a deeper bottom afterwards. But anyhow, it was the extreme that started pushing prices higher. We're seeing a bit of a decline now. Question is how long this can go on for. Well, the small speculators are at an all-time extreme. That's significant. But I would say that the extreme situation would be even more clear if commercials and large speculators could reach their all-time extreme levels as well. And if you look at the chart, there's still, well, I would say roughly 100,000 contracts movement in case of commercials and large speculators also. Moving on to cotton, our last market for the review, we have a 88 report extreme in large speculators, and we've got 89 in commercials, so more or less the same extreme. It is a bullish extreme, of course. If you look at the chart, you may see how effective these bullish extremes were in the past. So it's there, it's in the market. You can see this happening after a significant decline in prices. So I'd be pretty much suggesting you guys to really have your eyes on the cotton market. This extreme is significant, and judging by the past reactions from price, these signals were pretty effective. Okay, that's going to be all for this week. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.